Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Invest Conference. And I'm thrilled to be with these two gentlemen, Jeremy Schwartz, Director of Research from WisdomTree, and Dave Abner, Head of Capital Markets from WisdomTree. Gentlemen, thank you for being here. Appreciate it.
Thanks for having us.
You guys have been kind of the talk of the town on the ETF side. With everything you've been doing on the hedge equity, hedge currency space, and Jeremy, maybe you can just give us a picture of the landscape right now. Hedge currency is huge, and the opportunities even seem that much better going forward, don't they?
It's amazing when you think about 1 year ago we were here at this conference and DXJ was around a $500 million fund. Today it's over $10 billion. And it was just one year ago when Shinzo Abe got elected the Prime Minister of Japan, has really done a lot to change the mentality. They're trying to end deflation, stimulate the economy, and a lot of that is tied around the yen depreciating. And as the yen's been depreciating, the equities have been going up. He's really just getting started on a big part of his third arrow strategy to get the economy back in the right direction. And so I do believe that Japan has a long way to go. It's been a 25-year bear market. They're just starting to turn the corner of getting people to feel more positive.
So it's not the 8th or 9th inning there. We may just be in the early innings.
I think it's a 3 to 5 year trade. You've got the yen going, before the financial crisis, it was around 120 yen to the dollar. Today you're 100 yen to the dollar. So you still have 20% more in the yen just to get back to pre-US financial crisis levels.
I want to get Dave in here, but first, let's talk about Europe. There are great opportunities there as well, right?
I think it took Japan to give people the case study of why currency hedging matters, but Europe's another great example of, I don't know a lot of people who think long-term they're very bullish on the euro. There's a lot of reasons why the dollar should be gaining strength over time. We eventually may be the first central bank to exit our monetary policies. There's a lot of new exports coming from the US, oil discoveries that make the dollar potentially stronger over time. And then you've got to think about how do you get access to European stocks without that currency risk. So I think hedge, which is our European hedged equity, HEDJ, is another great option for accessing international equities without the currency risk.
Absolutely. Well, Dave, WisdomTree not only does a great job from an innovative standpoint as far as bringing ETFs to market, but I know you specifically and your team spent a lot of time working with advisors to help better educate them on trading ETFs once you've made that decision.
That's right. So we have spent, I joined the firm in April 2008, and since that time we've spent a lot of our time and resources from the capital market side working on building the infrastructure to help our customers trade our products really well. And actually DXJ and Hedge are great examples of that. If you look at DXJ a year ago, the fund traded less than 100,000 shares a day. And a lot of people might not have touched it because of that volume. Today that fund trades over 10 million shares a day, and it's part of an elite group of ETFs of, I think it's only 25 or 20 that trade more than 10 million shares a day. So it's a great story.
Do advisors stay away from ETFs with low volume, and is that the right thing to do?
It's not. Volume is not a measure of liquidity in ETFs, as you've discussed yourself many times in the past. And I think over the years, that was the mistake that people were making, and they're not doing it anymore. Advisors really have come to understand that volume is not a measure of liquidity in ETFs. They're looking at the implied liquidity, a measure of the underlying basket liquidity, and they're looking at other things that help them to trade the products better.
So would you say advisors are doing a better job of trading? They understand liquidity more? Because there was a while there where advisors and individual investors were diving in with both feet, but we're shooting ourselves in the foot. All the benefits of cost in an ETF are going out the window if we're not trading the right way, right?
That's exactly right. People are doing a much better job. I've been sort of on the circuit for 5 years now, trying to teach advisors how to use the products. And I'm really happy to say we're seeing a lot of changes. The way people use the funds, it's changed. The questions they ask at conferences like this, we're getting up to level 2. People are asking much more complicated questions. They've already understood level 1 stuff. We've really advanced people, so it's great.
That's great. So with all that and all the innovation, Jeremy, where are we in the next year as far as innovation for WisdomTree? Because I know you don't sit on your hands.
We've been thinking a lot about currency hedge, so we've been developing more currency hedge ETFs. I think the next big thing people are thinking about, what happens when interest rates rise. So we've been looking at different dividend baskets, a dividend growth theme, instead of just stock with the highest current yields, I think is a big area of the market we're focusing on, to try to provide innovative solutions for both the currency hedging as well as how do you protect your portfolio from rising interest rates, with that dividend growth theme as being an example of things we're working on currently.
That's great. Guys, thanks so much for being here today. Really appreciate you giving me a little of your time.
Thank you, Tom.
It's great to be here, Tom. It's
Thank
great
you.
to be here, Tom.